So what the heck is a mutual fund? Hi there, thanks for stopping by. Hope your day is treating you well. And today we're going to talk about what the heck is a mutual fund, right? So if you have a 401k, you are probably aware that inside the 401k there are a lot of different mutual funds, right? So you've probably heard of a mutual fund investment, but really you don't have any idea what a mutual fund is. So here's how it works. Let's say you have $5,000 to invest, right? And you want to buy some stocks. And you pick some companies you are familiar with, like, I don't know, Google and Amazon, because, hey, you're using Google every day, right? And the Amazon truck is probably a frequent visitor to your house. Now, first of all, this is not a recommendation of those two companies. I'm just showing you an example here. So you look up the price of Amazon and find out it's over $3,300 a share, and Google is somewhere around $2,400 a share, right? So your $5,000 that you want to invest is not enough to purchase one share each of Amazon and Google. Now, a mutual fund works differently. First, here's the thing. There's a mutual fund company. That mutual fund company will have a fund manager that manages the mutual fund. So think of a mutual fund like a big bucket of stocks that the fund manager buys. And investors across the world pool their money to invest in the fund. And the fund manager uses that money to buy a variety of stocks. So one mutual fund could have well over 50 different stocks within the fund. So if you invested your $5,000 into a mutual fund, then you're essentially investing in all the stocks that fund manager bought inside the mutual fund. And just like a grocery store has a variety of different types of food, right? Mutual funds have a variety as well. So, for example, let's say you really wanted to concentrate on technology companies. Well, there are mutual funds out there that will specifically buy tech stocks inside the fund. There are other sectors of the economy as well, such as manufacturing, retail stores, real estate, and really a whole bunch of others that mutual funds can focus on. So with mutual funds, they can get really specific on the type of stocks that the fund manager buys. You can look at funds that buy only U.S. large company stocks or only U.S. small company stocks. And they can get very customized as well. So let's say you want to invest in companies that are environmentally friendly, okay? There are funds that will have a goal of only purchasing stocks of companies that meet that criteria. Now, mutual funds are very popular way to invest because really a lot of reasons. First, they are diversified investment. So let's look back to your $5,000 investment, right? You may only be able to buy a couple of stocks with that $5,000 depending on the price. But what happens if those two stocks that you bought tank? Well, with a mutual fund, it could have 50 or more stocks in it, like I said. So perhaps 2 or 3 go down, but maybe the others go up. And this is where the diversification comes in, by investing in many different stocks within just one mutual fund. So another advantage is mutual funds, they have a professional money manager that manage the portfolio inside the fund. So that money manager is buying and selling on behalf of the investors. Another thing, mutual funds are very convenient. They have very low minimums to invest. Some might just have a few dollars as a minimum. So those are advantages. Now, there are some drawbacks with mutual funds. First, there are the fees and the costs associated. That money manager has to be paid somehow, right? There are what you call expense ratios within the fund. You won't see it, but it is there. Now, some funds may have much lower expense ratios than that. However, some might be higher, some might be lower. But there's also what we would call a sales charge, and that is with a loaded fund. So if a broker sold you a mutual fund, then there's a sales charge that could be applied. And the sales charge varies from fund to fund. Some are higher, some are lower. It also depends on the amount you invested. Usually, the higher the amount invested, the lower the sales charge. But I've seen some with 5.75% upfront sales charge. Then there's the tax situation, right? When the fund manager sells stocks within the fund, it could produce a gain, which is passed to you, the investor, as a capital gains distribution. You don't have control over what is being sold or bought within the fund. Now, each mutual fund will have what is called a prospectus, and you should read this very carefully because there you will find the specific fees, expenses, and sales charges that you will pay, as well as the fund's overall objective. So there you have it. What is a mutual fund in a nutshell? Big old bucket of stocks with a fund manager. Again, check the prospectus. Make sure it is suitable and right for you. And if you would like to see more videos like this discussing your personal finance, please hit that subscribe button below. I would appreciate it. Thanks for stopping by. Have a great day.